Learning objective 2, how do we use relevant costs in decision making? And again, we're going to be doing a lot of scenarios and hopping in and out of Excel later on as well. But let's look at this. You have two choices. Option A is you invest $200,000 and it yields you $50,000 this year in cash flow. And at the end of the year, you can sell for $250,000. That's choice A. Choice B is invest $210,000. It will yield $60,000 this year, and you could sell it at the end of the year for $275,000. Which of these would you choose? Again, if you want to play with some numbers on a piece of paper, go ahead and do so and hit pause. Otherwise, I will do the solution for you in 1, 2, 3. All right, so I'm going to hop out and go into Excel. The way we're going to look at frameworks for decision making is we're going to look at what are the options. In this case, we have two options, A and B, and lay out the criteria. And here, our criterion is profit. There may be different alternative criteria that you may consider, such as market share or brand value or reputation enhancement, things like that. But for now, let's keep it simple and make it about money, namely which makes you the most money. So let's just lay out the dollar amounts pertaining to options A and B. The cash flow from A is $50,000. The sales price for A is $250,000. That's the money you get. So you would get in the combination of cash flow and sales value, $300,000. The investment is, I have to put in $200,000. That's a negative, so that our value is a positive $100,000. First of all, yes, it makes sense because the revenues are greater than the expenses. And how much is $100,000? So you say, oh, go do A. Well, not so quick. You have another choice, and that's B. So let's look at B. The cash flow is 60. The selling price at the end of the year is 275. The total is 335. Your investment is negative 210. The net value is 335 minus 210, 125. In this particular case, choose this one, okay, because it makes more money. It makes $25,000 more than A. And what I'm doing here is to focus on the approach. The approach is let's lay out the options, let's determine what we're trying to solve, and let's put out a spreadsheet to figure out how to evaluate the options in the context of that criterion. In this case, net profit. That's a simple one, but hopefully you'll get it because we're going to use it throughout the rest of this particular video. Next, we're going to pick a slightly more complicated challenge, which is keep or replace. So this is a case where you have a machine that's getting a little old, and the question is, do you kind of live with it and have it chunked along, or replace it with a shiny new machine? So Trekker Tires manufactures 10,000 tires per year, and they sell them for a price of $20,000 per tire. Management is looking at replacing the old machine with a new machine. And the question is, of the following factors, which ones are relevant? The way to think about it is it has to be future, not in the past, and it has to differ among the alternatives you're considering. I will give you a chance to hit pause now to think about it, and if not, I will just go through and continue to tape in 1, 2, 3. All right. I'm going to grab a pen here. Let's use this green highlighter and say which ones are relevant. Are 10,000 tires per year relevant? Yes, because we need to know the volume so that we can consider the financial effect of manufacturing 10,000 tires with the old machine or manufacturing 10,000 with better economics with the new machine. Is the price of $20 each relevant? In this case, no, because our sales price isn't what we're trying to do. We're looking at cost of manufacturing. Are direct material costs relevant? The answer is no, because notice they are the same. It doesn't differ. Is the conversion cost relevant? The answer here is yes, because they're future and differ among alternatives. Is the selling and distribution cost relevant? No, because it's still $1 whether you use the old machine or the new machine. Is the batch level inspection adjustment costs relevant? Yes, because it differs among alternatives. Is the batch size relevant? No, because it's the same. Is the cost relevant? Cost of the old machine is not relevant, but the cost of the new machine is relevant. The estimated useful life of the old one is relevant because we want to know if it's useful for how much longer in the future. And is the disposal value relevant? Yes, it's relevant for the old machine because if we sold it and if we have a new machine, we'd be able to sell it, and that is relevant. And is the disposal value relevant for the new machine? Yes, because at some point we're going to be selling it and it's relevant. So I'm going to then switch pens to reddish to be, this is not relevant. It's important, but it's not relevant here because we're going to make the tires and the selling price is set. This is not relevant because it does not change or does not differ. This is not relevant because it does not differ. Batch size is not relevant because it does not differ. The cost of the old machine is a sunk cost, so it's not relevant. We've done the determination of which costs are relevant. Moving to the next thought is, how do we use differential analysis versus aggregate? If we use differential, it's kind of a shortcut. It's where we say we'll only look at the relevant costs that differ between alternatives, and we can ignore everything else. This is a preferred approach when we are looking at a quick way to do analysis and to not consider needless facts and clutter. Benefits are that we only focus on the ones that matter. Second, it's fewer items, so it's a little quicker. And third, it helps simplify complicated situations. If you have 1,000 things in the air, but only 5 are relevant, if you could sort through and get rid of everything but the 5, you're going to be more efficient and perhaps not make a clerical error.